There's nothing I love more than a special situation whenever we have a company that had some type of a catalyst where it actually did amazingly well. And once this happens, the market overreacts to the upside and it prices the stock to pretty close to perfection. But then, whenever this catalyst is gone, the market overreacts to the downside, and then you have a pretty amazing buying opportunity in many companies, which I was actually able to take advantage of with COVID. There were many stocks that did amazingly well whenever we had COVID, and after COVID was over, their business declined. But the market overreacted, even though the fundamentals were not really that bad, but it overreacted to the downside, and it actually created a pretty amazing opportunity in many of those names. And today we're going to take a look at Pfizer, which essentially has the same story. The stock shot up massively whenever they had the COVID vaccines. They were making a lot of money on those, COVID vaccine, and now as COVID is pretty close to being over, we don't have as much demand on those vaccines as we had before. The stock has been going down ever since, and especially lately, it's pretty much been going down, every single day. And the stock is trading at the same price that it used to trade at in 2019. Yet Pfizer is a much different company than what it was in 2019. Its balance sheet is very different than what it was in 2019. So the market could essentially be making a mistake we can take advantage of with Pfizer. But I'm going to review all those things in today's video and try to come up with a fair value for Pfizer where we can actually buy it and maybe take advantage of this mistake. So again, I hope you enjoy it. Now, the main thing with Pfizer, it's not only going down because COVID is over. There's many headwinds on the company, and one of them is that Pfizer is in talks to acquire Seagen in a deal worth more than $30 billion. And with me doing some research on Seagen, it's a more of a cancer-related type of treatment stock, which I don't have a lot of experience, with pharma and biotech, so I try to stay away from them. But I can still analyze big companies like Pfizer and especially look at financials and try to, use some common sense and determine if the market is making a mistake or not. But again, this deal is going in maybe for $30 billion, and the market is very worried that maybe Pfizer is actually overpaying for Seagen. Now, looking at Seagen's analyst estimates, is expected to grow revenues massively. And this is what Pfizer really needs after COVID is pretty much over. They need something that's massively growing revenues. Now, the only problem with Seagen is that it's not profitable. And it's not expected to reach a profit until 2025, which again could lead a lot of investors to believe that maybe Pfizer is actually overpaying for Seagen. But another reason why Pfizer might be overpaying for Seagen is because Merck tried to acquire Seagen actually in 2022, and the buyout got stalled because the companies failed to agree on a price. And again, Merck was pricing Seagen around $40 billion. So at $40 billion in 2022, Seagen did not accept this offer from Merck. But now Pfizer is trying to acquire them for $30 billion. So again, maybe, Pfizer is going to end up overpaying and paying even more than $40 billion, which is really waiting on the share price. But if you actually believe in the management and in their ability to do their acquisitions, and based on my own research, the management at Pfizer is pretty amazing, and I believe they have a good track record in doing acquisitions, this could be again just short-term noise for the company. Now, taking a deeper look at Pfizer and where Pfizer is at right now versus 2019, now Pfizer is making around $69 billion of revenue. In 2019, Pfizer was making $51 billion of revenue. Now in 2023 is expected, based on Pfizer's guidance, to make pretty close to $19.5 billion of net income. In 2016, Pfizer was making $16.5 billion of net income. So it's very different from 2019. So you may think maybe the balance sheet is much worse. It's actually not. In 2019, Pfizer had around $43.5 billion of net debt. Now in 2022, it has pretty close to $16.5 billion of net debt. So it's much better situation right now than what it was in 2019, yet Pfizer is trading at the same price it was trading at in 2019. Now maybe in 2019 Pfizer, was overvalued, which is why if we look at the dividend yield, actually Pfizer is yielding around 4%, and the mean dividend yield for Pfizer is pretty close to 3.5%. So now it's yielding a much higher dividend than where it normally yields at. And if we look at the PE ratio on a historical basis, Pfizer is now trading around 11.5 times earnings, and on the mean, Pfizer yielded pretty close to 13 times earnings, and it traded as high as 17 times earnings. So based on all the metrics and based off us looking at Pfizer's financials, their balance sheet, their income statements, their net income, Pfizer is a much better company than what it was in 2019, yet it's trading at the same exact price, which would lead us to believe that maybe Mr. Market is making a mistake by overreacting on the downside with Pfizer like it did with many other stocks. Now the question is of looking at the upside with Pfizer, as we know that Mr. Market is making a mistake. So we have to look at Pfizer's future and what a kind of a return we can expect if we buy Pfizer at such prices. Now, normally this is not how I analyze stocks, but I'm actually using some of the analysts' estimates for Pfizer. And I believe those estimates are not including any acquisitions, which is why I like to use them, because I don't like to, value companies at the best case scenario. I like to value them at the worst case scenario. And the worst case scenario for Pfizer is that it pretty much, stalls on revenue and it stalls on net income, which is expected pretty much a pretty slow bump in net income from now till 2027, and revenue is pretty much going to be flat. So we can use this as a guidance for us, to value Pfizer. Now, to make it simple and estimate a pretty fair return we can get with Pfizer, assuming it stays at the same valuation, their net income is expected to be pretty close between $21 to $22 billion from now till 2027. So using again the $22 billion and its market cap is $231 billion, this is an earnings yield of 9%, meaning if Pfizer takes this net income and actually, return it to you as a shareholder in terms of buybacks and dividends, the free cash flow is also $22 billion. So if they return all their profits to you as a shareholder, you get an annual return with buybacks, dividend, debt pay down and stuff, pretty close to 9% every single year, outside of a multiple expansion for Pfizer. Maybe with a multiple expansion it could be 12 to 13%. So my problem with Pfizer is, yes, the market might be making a mistake. Yes, Pfizer is not overvalued, it's actually pretty close to undervalued, but I don't see any short-term catalyst for any type of a massive move or any value realization with Pfizer. If you're a dividend investor, you're happy collecting 4% and maybe some price appreciation, you could get 8 to 10% on Pfizer, in my opinion, and this is a pretty easy bet and a pretty safe bet, again, in my opinion. But me personally, I try to look for small cap type of stocks or some type of stocks where they are misunderstood and have some type of a catalyst that could realize the value pretty quickly. And I personally don't see it with Pfizer. So I believe Pfizer is a buy if you're a conservative investor looking for a dividend and some upside potential every single year. This is not bad at all. But for me personally, again, yes, Pfizer is cheap, but I don't see any catalyst whatsoever that could, bring massive, shareholder return over the next, 2 to 3 years, unless we have something pretty bad, some health issues happen in the world, which I hope it doesn't happen. But this is, the only way I can see any quick value realization with Pfizer. So again, it's undervalued, but for me personally, it's not a buy. If you're a conservative investor, maybe Pfizer is a good buy for you. So thank you for watching this video. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.